This is Bite Sized Business, the channel where we take company news and reports and simplify it down into a few important metrics and ratios to determine a company's financial health. In this installment, we will be taking a bite into Yum China. To starters, Yum China was formed in 2016 as a spin off from Yum Brands, which we covered in a previous episode. The spin off came as China's growth accelerated, but shareholders were afraid of regulation and falling U.S. same store sales. Yum China owns and or operates over 15,000 restaurants in over 2,100 cities across China. Diving into the main course, we see in the last 12 months, Yum China has done $11.2 billion in revenue. This is compared to their 2022 numbers of $9.6 billion. EBITDA came in at $1.6 billion, which was up from $1.26 billion in 2022. Finally, net income came in at $893 million, or just shy of $900 million, which was up from $442 million in 2022, but only up from $827 million in the more comparable year of 2023. Now off to the balance sheet. Yum China posted assets of $11.8 billion. This is flat from their 2022 numbers, which also came in at around $11.8 billion. Liabilities for the most recent quarter totaled at $5 billion. This is down from $5.3 billion in 2022. This left us with a shareholder equity of $6.7 billion, which was down from $7.1 billion in 2022. The company's total debt sat at just around $2.7 billion, which was up from $2.4 billion in 2022. Now taking a look at the cash flow statement, we can see the company most recently posted a free cash flow of $657 million. This is down from 2022's number of $734 million. In the last 12 months, the company repurchased almost $1.4 billion of stock, and since the start of 2022, the company has repurchased nearly $2.5 billion of stock. Now taking a look at the shares outstanding graph, we can see that since 2016, shares of Yum China have stayed relatively similar. They have only bought back around 10 million shares. You can see in 2020 a large jump in shares, and this is likely due to them selling more shares to raise capital during COVID when store sales fell. This leads us to the dessert. The dessert is the review of everything we just spoke about, and so today we dove into Yum China. Yum China was the spin-off of Yum Brands. They trade under the ticker symbol YUMC. They're in the fast food industry and posted revenue of $11.2 billion, or $4 billion more than their American and European counterpart. EBITDA came in at $800 million lower than the American European counterpart at $1.6 billion. Net income came in at $900 million. Total debt is nearly a quarter of the Yum Brands company, which came in at $2.678 billion. They have nearly 2 times the assets, coming in at $11.8 billion, and a third of the debt, coming in at $5 billion. This leaves us with a shareholder equity of $5 billion. In the last 12 months, Yum China has done $657 million of free cash flow and nearly $1.4 billion of stock buybacks. If we look at the ratios, we can see Yum China has a debt to equity of 0.53, a debt to EBITDA of 1.65, an EBITDA margin of 14%, a net profit margin of 8%. They've done 212% of their free cash flow in stock buybacks in the last 12 months, and they've done 156% of their net income in stock buybacks. If we compare some of these between Yum China and Yum Brands, we can see Yum China is better on a debt to equity and debt to EBITDA perspective, but their EBITDA margin and net profit margin are slightly lower. If we look at the comparisons, we can see that Yum China has a low debt to equity and a low debt to EBITDA. These are the best numbers we have seen out of the fast food companies we have reviewed. They have a neutral EBITDA margin and a neutral net profit margin, which are the middle numbers, and so nothing to be ashamed of when it comes to a corporate margin level. Due to these low debt to equity and debt to EBITDA ratios and the neutral EBITDA margin and net profit margin, I've decided that Yum China will be given a green light when it comes to financial health, and given this, Yum China appears to be the winner of the fast food series as they have the best debt to equity and the best debt to EBITDA with the most sustainable EBITDA margin and net profit margin. This brings us to the last portion of this video. This is usually the place where I present the check. In the case of Yum China, I'm struggling to find any bad news that I can put to light to be the check. In this case, I feel like we may have gotten a free meal as we have a company that is growing with some relatively rapid speed. They are opening more stores. As we can see here, they just opened their 1,000th store in this region of China here. And they have good debt ratios, they have a strong margin, and they're not starved for cash. In the case of Yum China, I really think we have a solid financial company, and I'm not seeing any downsides that I can try to expose. I really hope you enjoyed the video on Yum China, and I hope you will join me for the next series when I take a look at American soft drink companies such as PepsiCo, Coca-Cola, and Keurig Dr. Pepper. Thank you for watching, and please feel free to like, comment, and subscribe if you enjoyed the Yum China video or the fast food series as a whole.